Can you guys see the screen okay?
Yes.
Well, this is what I would think, especially right now, it's the quickest way to raise $1 million. What I'm going to cover is really just who I am. I'm a gentleman that been an entrepreneur all my life, created 2 companies that were acquired, been on TV as an investor shark, started off poor, by the way, and been a Silicon Valley angel investor, invested early in Dropbox and TaskRabbit. But the biggest thing I'm the most proud of is being a pioneer of this term called equity crowdfunding, both as an investor and as an advisor, as well as a co-founder. 3 of the companies that I co-founded or been an angel investor and advisor in raised in excess of $1 billion. That's with the B, over the last 7 years. So what we're going to cover today is basically how to use the internet to raise money. As we know, we're locked down, so the best way to reach people right now is online. You know, meeting people in person is going to be a challenge to do that. And we're going to talk about why now some of the good times to do that. We're also going to talk about the different types of crowdfunding, as well as the different platforms, some of the laws, and more about what do you put on your platform or your offering page, Facebook ads, as well as how do you do it organically, as well as a free gift towards the end. We're not going to cover today any review of your PowerPoint. I'm assuming that you're in some program or you know how to get that information. But if for some reason you want me to review your PowerPoint at the end, I'll provide you a link where you could provide that information to me. What I'm going to do is I'm going to start off by saying this is very real. What I'm going to do, I'm going to showcase someone here named Dawn who raised a little over $1 million using equity crowdfunding. And I did an interview with her, and I'm going to play the clip. And I think it's important for you guys to watch.
Hi, Manny. Thanks for having me today. I'm super excited to share my story.
As a solo founder, a Black founder, and a woman, you know, I've been in investor circles for years, and that's a huge uphill battle. You know, what really stands out here is that, you know, many people think about using equity crowdfunding and then it dies. You know, some people don't take action. It's either a belief that they can't do it or a fear or people in their ear. What made you different?
We just felt like really go for it because we felt like it really was our last option. And I said, okay, let's just give it all we have. We did advertising on Facebook and Instagram. We didn't have any money when we started. We had no money when we started. The first 25, 30,000 came from my network. So then after we raised that first money, we took some out and put it into ads. And we kept putting money into ads. We didn't spend it on business. You know, we went and put it right back into the campaign. We invested about $30,000 into ads, and we raised $275,000 from those ads.
So why was your mindset different of using Facebook ads where everyone else just used Facebook to post photos of their dogs? Why did you see that as a business tool?
So I studied ICOs, and that was the tool. Social media, Facebook ads, and Twitter was the way that many of those people raised $30, $50, $100 million doing ICOs. So I took the exact same model from ICO and applied it to my crowdfunding campaign.
On the Facebook side, did you place the ad yourself or did you hire an agency?
No, I did hire an agency.
What would you tell a founder? You know, you've done it, you raised $1 million. What would you tell them that if they're listening to only this clip?
I would tell them that equity crowdfunding is for everyone. It is possible to raise a significant amount of capital in that way. I believe it is the future of fundraising, and I believe it is the most level playing field that exists today.
So I'm going to talk about some of the myths that we may hear when we talk about using the internet to raise money or using equity crowdfunding. We hear like, well, it's dumb money. And you usually hear that from people that you either come from money or have raised from venture. And sometimes they belittle people by saying that. In reality, it's money. You turn it into something that you can turn into something that produce more money. Then don't worry what people scare you off by saying, oh, it's dumb money. Another time, some people will say, well, then you're eligible to get a lawsuit. Don't even worry about that. Worry about doing the right things and building your business best as possible. Again, you also hear some people say, well, you know, if you do raise equity crowdfunding, smart VCs won't invest. Well, I know through the case of Notion, they utilize our platform and they went on to raise from Tim Draper, a very smart VC. So that's a myth that's not accurate. And then there's a lot of other excuses on why people are not going to use the internet to raise money. Now, in the past, as you know, the old way was meeting investors, shaking hands, going to events. That's not happening in the next few months. So I'm going to talk about the old ways. Again, you know about the old ways. It's the old-fashioned ways, talking with investors. But the trend that was happening since 2013 is using the internet to raise money. And now, for some weird reason, there's more people online than ever before. And people are looking for investment opportunities. I'm going to show you how to use them and how to package your investment opportunity. Any questions you have, feel free to add it in the chat room because I will answer them. But the biggest thing I want to talk about when I bring this up, and I've spoken over 30 countries on this subject and many groups, and the biggest thing I sometimes see people come back and they talk with me and then they, well, remember this one guy, I saw him about 4 times and I finally recognized his face and I said, so how are things going? He said, well, they're really not. I said, so I gave him more techniques and I realized after listening to him, he didn't believe he could do it. So I gave him some suggestions on how to write out his goal, come up with a specific plan of action, use positive self-talk when he wasn't believing he can do it, and just keep imagining the money in the bank, already in the bank, while he's going through that process. I'm proud to say, when I saw him 60 days later, he raised in excess of $600,000, and I think many other people are utilizing that same formula. And I'm going to talk briefly about the different types of crowdfunding because it's all sounds the same. Many people know about Kickstarter. You know, you can raise money with a donation. You guys may already know that. I'm going to focus on the equity side. There's 2 types. I'm mainly going to cover the accredited investors type. And again, there's a lot of them. The term accredited investor is people that have an income of $200,000 a year, $300,000 if they're married, or a net worth of $1 million. Again, there's a ton of them, especially online, and I'll show you how to reach them. We're not going to cover the non-accredited investor, and I really believe now with the challenging of the market, this is probably not the best target audience. Now, there's a few platforms. I'm just going to break it down to 3 categories. Number 1, there's listing sites like AngelList. Yes, there's ways that investors can pick you up and they can syndicate you around, but as an entrepreneur, it's free to go up there and add a listing and put your offering up there. You still need to get attention to that site. It doesn't happen automatically. Second is crowdfunder. You pay to be on the site. I think it's somewhere around $450 per month, $4.99, something like that. And what it does, it allows you to get attention to their investor audience. Again, you still have to use their platform, but some cases, investors reach out to you. And I know through my experience and the experience of many others that that's a good platform, a good investment. In some cases, the first month doesn't work, but just keep modifying your offering and you'll start to see it work. And then there's regulated crowdfunding platforms that allows everyday people to invest. What I'm going to talk about today is what I'm trying to show people is just get started. And the biggest, simplest way of getting started is using the regulation came out of the Jobs Act, actually Title II of the Jobs Act, called 506C as in Charlie. This was the first time in 80+ years that any private offering could publicly advertise their offering, meaning you can go on social media, run Facebook ads and say that you're raising money. Now there's one requirement. You need a third-party letter to verify that, in fact, they're an accredited investor before you take their money. And we use this company called Verify Investor, and where they will do the verification and provide the investor letter, so then we can take the money from the investor. So again, that's when you run, say, Facebook ads, which I'll go into. And it's what I've seen when this exploded, meaning greatly increased in the amount of capital coming in, was when people started running ads on Facebook or Google ads this really went from zero to many billions of dollars, and this is a most effective way. You don't need a platform approval for this. You don't need a fancy filing. In fact, after you raise your first dollar, you just make a filing with the SEC after 15 days. Now, I'm going to talk about platforms for a moment here because most people think, what platform do you suggest, Manny? Where should I start? In fact, I've seen people not use a platform. They may have used certain sites like ClickFunnels where they created their own landing page. But on that landing page, it also had specific things such as a PowerPoint or your storytelling video and about your team and if you're covered in the media, as well as included any of the legal docs that you have. And if you don't know where to get the legal docs, Google Y Combinator Safe Note, as well as Cooley has some free information on how to get some legal documents to get started. But most people are usually stuck in fear thinking it's the legal part that they're missing. But in reality, again, you could just Google Y Combinator Safe Note. You can find the investment note there, read along the instructions. You can find a lawyer to review it for a couple of hours maybe before you use it if you need that. And with 506C as in Charlie, no filing is needed. You have to have an entity to raise it from, like a corporation. And when you start running ads, when people want to invest, make sure you verify it through a third party that they're accredited. Now, this is the biggest thing that I really don't talk much about on any of my videos. I have the most popular video of all time on YouTube, how to raise money using equity crowdfunding. This was a couple of years ago. And that was, in many of my other talks, was more about how to utilize your audience. But I realized a lot of people don't have a massive audience. Most people have a few people following them. And what I found is that people were using Facebook ads by making a targeted investment, targeting the certain people, which we'll go through it briefly. And they moved them from the Facebook ad to a landing page, not their website. So a landing page you can use like ClickFunnels, which is pretty cheap to use. And you create this landing page, and then you can either invite them to a webinar, which is just like this, where investors could listen in to your presentation, or you can educate them on how you see the future of the business, or you could just direct them to your offering page where you're selling stocks at X amount and this is what you're doing. Very clear. It depends on what type of business you're in, and you have to experiment with A/B testing on how this could work for you. And the fourth box I want to explain is that I think another big deal is custom audience. So a lot of people go around in the community and they may get business cards from investors, which they have their email address on there or their cell phone number. You make an Excel file of those investor names, and you can upload it through the thing called Facebook Custom Audience. And you can target your ads, excuse me, you can target your ads specifically to the list. So that helps reduce the cost of advertising as well as increase your return. In terms of running the ads, there's a part in the box, which I'll show you, that you could focus on this demographic. Again, these are just what you call the known investors category. It doesn't mean other people don't invest. Focus on the demographics of male, 40 to about 56 years old. And then you can go in the browse section and the demographics and focus on the top 5% or 10% income areas. And then since you don't have a major budget to start with, focus on areas that have certain cities that have they're known investors, like Silicon Valley, or maybe if you, wherever you're at in the world, maybe there's cities that are known to have money, and you could focus on that zip code as well as the top things I talked about: males 40 to 56 years old, the top 5% or 10% income brackets. So therefore you're reaching the targeted accredited investors. And one other thing to think about when running ads is adding a thing called a pixel. Again, I'm going to show you this shortly, but I want to give you an overview. The pixel, basically when a person clicks on the ad, for those that may not know this, it ends up putting a cookie in their browser or in their laptop. And the benefit is that later on, you can retarget them, meaning remarket them different ads. So what you want to do is start off by running a bunch of small ads, test ads. You know, the minimum budget is $1 a day. So get creative, run a bunch of small ads and see what the results are. But the more ads you have, the better you can find that hit ad that can make your fundraising campaign go great. I am a partner in a crowdfunding agency that helps companies with this, but I believe for those entrepreneurs that are bootstrapping, just focus. There's a lot of great videos on YouTube on how to do it. If you have that hungry desire, you can do it yourself. One other thing I want to point out is that if you want to pitch me your opportunity, here's a way to reach me. You get a 15-minute chance to get an opportunity to chat with me, and I want to review your pitch. After you do that, send me an email with your PowerPoint. And if you think, well, you can benefit from maybe weekly mentorship call and actually your crowdfunding campaign, feel free to click on this link. It's $59. It's more like a donation to help the community. And if you need help with the $59, just ask for sponsorship. So now I'm going to go for a moment there. I'm going to stop and see if there's any questions. If not, then we're going to actually do some hands-on things, or I'm going to show you little things online that you may not be aware of. Looking at the questions here, first question comes from Jose Ramos. What is the appetite for age tech? You know, that the answer is that it depends. You know, I think that what you should look at is what your potential investors and why they would invest in that category and what other interest they may have. So therefore you can utilize things like Facebook and try to figure out their interest and the same income bracket. Then you can more target them than just some random person that happens to live in that neighborhood. I think the biggest thing is most people don't realize is that entrepreneurs or people that are selling the future vision, we need to educate people on where it's going. And so think about how do you capture their attention so you can provide an education for them so they can understand where things at and where things are going to go. If there's no other questions, then I'll move on to the second part of it. Okay, you have someone here who wants to speak. Hello, Bruce. How can I help you?
Hey man, can you hear me?
I can, yes.
So what's that website to go and start the fund? Because I think I was at the wrong one. There's a platform where I could create the page, my pitch. It's something like a page, is it?
You mean a click funnel or some type of landing page?
Yeah, I'm not too sure right now, Manny. I don't even know what I'm asking. I think because I was going to register for to open up a fund, but I guess I was doing it at the wrong website. Angel something?
Angel.co. That's specifically for, which industry are you in?
Real estate. This is Bruce.
Okay. Hey, Bruce. Yeah. Well, AngelList is specifically for tech startups, so it's not
Okay.
for real estate companies.
Okay.
All right. Thanks. So next question. All right. So what I'm going to do is kind of give you guys a quick overview of what I see online.
Hey, Manny, there's a couple of questions that came in through the Q&A.
Okay, one second. All right, perfect. Okay, so there's three questions. First question is, our business is currently registered as a PPP which is known as a private placement memorandum for people that are not in the legal world. That just means a very big legal document that covers a lot of the risk and talks about the opportunity. Under 506B as in boy, is it difficult to modify it to a 506C to be able to solicit investors in this way? Any suggestion to making that change? Well, the simple legal answer to a lot of things is it depends, but it really depends on, have you raised money yet? Let me ask you, answer it live. Hello, Bruce, can you hear me?
Yes, I could still hear you.
Thank you. Have you raised money yet?
I have not.
Perfect. So the answer is the same documents for 506C is the same thing as 506B. The only difference is you're going to then raise money through publicly solicitation, and you're not doing quietly like a 506B is people that you happen to know in your community. So the answer is the same documents, and in terms of the filing, in fact, it's the same filing. You just check the different box on the Securities Exchange Commission websites when you update a Form D. Does that answer your question?
I believe that was a question from Paul.
Did I answer your question, Paul? I'm sorry, say that again. Okay, so Manny, let's see here. I'm going to answer this question. Can you briefly talk about 506B or C laws and how it impacts equity crowd raised for investment firms later on? Yes, I can. When we got started in this in 2013, 506C as in Charlie was not around yet. And then when 506C as in Charlie came out, all the Silicon Valley angel groups, as in fact any of the angel groups associated with the Angel Capital Association at the time, since I last checked as well, they do not allow anyone to pitch in the angel group if you use 506C as in Charlie. But I've seen companies use it, and I think it's really based on a person that's attempting to raise. If you're really good, if you're a tech firm and you are connected, you don't need to even be on this call. But if in fact you're having a challenge to raise it, my biggest suggestion, just go to 506B as in boy and start raising it and have the cash, and because if you've done it once, I've seen many people do it once, they do it a second time, a third time, fourth time, and so on. So it's not a one-time ordeal. Especially if you learn how to do it, you can always consistently do it. Hope that makes sense. Miguel Garcia asks, what is the average funding amount that you see, and what percentage of ownership do you give for that amount? Well, the answer to your question, it also is another one. It depends because every offering is different. I can give you an example of a offering that we did at our company, and we thought that the average check size was going to be around 5,000, but the largest check was $500,000, and the smallest was 1,000. So it really depends. Second is, as you are setting the terms, so you're the offerer. Think of it as you're selling something, which that something happens to be shares. So either you can go directly and sell the shares, or you can use a safe note where you can state that it's really debt that will convert into equity. Again, depends on what industry you're in. I think you find a lot of great information on Y Combinator's website or Google Y Combinator Safe Note. That's a strategy utilized for a lot of tech firms. If that doesn't work for you, then you decide for yourself. You place the price on the round versus waiting for an investor to tell you what the price is or waiting later on. Does that make sense, Miguel? All right, next question comes from Jose Ramos. Are you sharing slides? The answer is yes. Second is, we are a subchapter S. Should we migrate to an LLC? If one is raising money and they're using the online methods, I'm just familiar with people using a C Corp and selling shares. But however, some people may be, say, in a restaurant space, they may have an LLC and they were going to raise for like a revenue share note, which is not selling interest in a company, and I've seen an LLC used for that. But most of the time, 99% of the time, is a C Corp that I've seen. And the reason for that is under a C Corp or an S Corp is for a small handful of shareholders. C Corp, you can have thousands of shareholders. I think the new rule is 2,000 shareholders. Okay, and Bruce says, can you raise on the same fund all the time? Can you raise on the same fund all the time? Well, it depends on what legal documents you have in your fund. And so if you are, let's say if you're raising a $100 million fund and you put in the Word document with your lawyer that your minimum amount to close is $1, and you're going to have what you call a rolling close that you're always going to be raising, and whatever the money comes in that raises goes into the investment. Yes, that's one way of doing it. Okay, Paul asked a question. This is my question. And yes, I have already raised money. Well, consult with your lawyer on that. Some lawyers, every lawyer has different opinions. So you can run a C and a B simultaneously. The real question is the lead source. If you're running an advertisement and an advertisement brings in a lead and that lead is not from your inner circle, then you need a verify investor letter or some third-party letter such as a lawyer saying that they're accredited investor or their financial advisor or their accountant. So again, if you already raised money, chat with your lawyer about that or send me an email and I'll chat more with that regarding that. Let's see here. Next one. Okay, perfect. Yes, thanks. Running them simultaneously could be a good option. It is, you know, I'm gonna give you an example. There's at Realty Shares, we focus on 506B. So 506B was basically, we promoted the company Realty Shares, and then investors would go to the platform and then check the box that they're accredited. And then inside of the platforms, they saw the different investment opportunities. Some companies like Funders Club utilize that same model. They publicize the name, and then when they check the box, they see the investment opportunities on the inside. Same thing with Dream Funded. Or some people have a website on the outside of their site. It's we're raising money. Click the link if you want more information, and it's not hidden. So that's a 506C. I've seen both used. Again, check. Always got to say, you know, check with your legal counsel. All right. Seems like we got everyone answered. What anything specific would you guys like to see before I just go online and kind of point a few things out to you guys? I'll wait a couple of minutes for those questions. So, can you guys see my screen? Okay. How long, first question is, how long does it take to raise funds in this times? It really depends on the offering and it depends on your marketing strategy. So really, it's unknown. Accredited investors, some people always have money. So don't believe the news that people are having a hard time. There's people that always have money looking for great opportunities. And it's about the belief and using marketing to attract that attention so they can see your investment opportunity. What I've seen on average, if you're raising $1 million and you have a good offering, meaning you have a good PowerPoint, a pitch video, you have some traction, some good social proof. You know, I've seen $1 million come in under 60 days. I've seen a lot more than that as well. It just depends on who you are and how far away are you from getting started. So I really don't know those answers, so it's hard to state. Again, the timing, it really doesn't really matter what's going on with this economy because accredited investors still have money. Maybe if you're going after non-accredited investor using regulated sites, that's why I haven't talked about it in this call today. You may have a challenge there because some people are holding on to their money tightly. So what I'm gonna do here is now show, okay, I'm gonna show crowdfunder, kind of give you an overview. again, there's no approval needed to be on the site here. So anyone could put up anything and be live in a matter of paying on a credit card. These numbers also are controlled based off of other accounts giving the interest numbers. So these are numbers that are interest. This does not necessarily mean cash is in the bank, although it appears that way. This is everything on the site should be using 506C as in Charlie because they're publicly advertising their investment. So I'll just pick a big one out of the blue, pick this one here. This one's been raising for a long time, very, very, very long time. And so they just keep extending it. Now this number, again, it doesn't mean it's in the bank. This number could be a bunch of friends saying they want to invest, providing commitments, and it appears that it's really popular, so people want to say that they're interested. They're using 506C as in Charlie, so they're publicly advertising, and let's watch the video for a second. They have a video for 46 seconds, and the first thing I see here, it does not appear to be a founder speaking. Where is the founder? That's a question mark. Another thing they're doing here is they're saying you invest now, they're going to do a fundraiser, Regulation A plus at a higher price. So it's basically to get in and you can sell it for more. Now ask yourself a question, why isn't there a founder speaking right now? Where is the founder? Founder is an emotional part of the business. The founder's belief and vision rubs off on a person and they tend to invest. But for some reason, there's no founder in this video. I would not suggest something like this because how would I know there's a real deal person behind it? They're saying they're gonna, again, they're setting their own terms here. I think it's interesting that they're claiming it's a Series A. They're using terminologies that, in fact, well, should not be used. Because if they're Series A, they'll be dealing with an investor. They're using fancy terms that are not needed at this stage. I'm not attacking this campaign. I just want to show you something that you can pay attention to what they're doing and how they're doing it. They're claiming that the sales are this amount. Okay. The sales are that high. Why would they be using this? Let's look at their PowerPoint presentation. And there's one thing I keep looking for as a team, guys. Again, I did not see this before this call. I just decided to pick one at random. Where is the team? The team is the most important part of the business. Without a team, you just have a bunch of hype. So I have a hard time believing that this company that doesn't showcase a team raised that kind of money. It doesn't make any sense. So let's go down to the team here. Now here's the team. Why isn't the team with the JD and a CPA, why isn't that, wait a minute, he's not a founder. Hold on one second, he's not a founder. Executive chairman. Anyhow, I'll move to the next one. I want to kind of give you, and if you have a campaign you want me to review, I can review it for you to kind of give you some feedback. So I'm going to now go to just another one at random, then I'll pick another one. By the way, they're paying to be on the main page. I think last I checked was what, $1,500 to be on the main page. So you have a former Shark as a celebrity guy endorsing their campaign. Why is he the only one pitching it? Where's the founders? This is interesting. Everything we taught in Silicon Valley, it's all about having the founders pitch it, but yet I don't see the founders in the video. What an interesting change of a world that we're in. They really promote him a lot. Is he the founder or is he just the spokesperson? No, he's not the founder. It's pretty interesting. They're relying on someone else's credibility. Good hint for the day. All right, so now I'm going to go to another site. Hold on for a second. All right, so now I'm going to go to Angels List to kind of give you an example of a different site. On Angels List, you can have your profile and you can create your startup. You can put whatever you want in here. There's no approval needed for it, but you still need to reach investors. Most people say, well, how do you reach investors, Manny? Well, you can go here. There's a little tab called More, and it's investors. And you have a lot of them. The thing is, if you're connected to people through direct connections, a lot of investors will show up. But if you're not, feel free to start getting connected to people. So if you want to look for investors, to say, if I'm going to look for how many angel investors I'm connected with, direct connection, there's 326 for in the United States, 426. But if I just want to say, I want to look for any type of investor, I don't know why that goes down, but any type of investor has a number on this side here. But let me explain how that works. So you pick an investor, say this guy here, and you can message them directly. And for those that you can't message directly, try to find who's connected to that person to have them introduce you. If you got nothing to do at home right now, which a lot of people don't, they're stuck at home, use this as a research tool and start messaging people. And you can utilize Facebook to reach them. You can utilize LinkedIn to reach them. A lot of them are there. I remember when I was just getting started, I didn't really have an investor network like I have today. I utilize people that are older that already done it to kind of be on my advisory team. And then I would utilize them to connect with me on Angels List. And then their network would expose to me, and then I would reach out to the different people. And then you can say hit the secondary network, and that number should be a lot greater. So those are people that I'm connected to, or they're connected to someone else. So think about the 8,000 something. There's many, many of them online. And if you have anyone on the call have an actual company that you have a website up on, or anyone have a live campaign going? All right. So someone raised his hand. Perfect. Let's see here. Trying to get to you. Not sure what's wrong with my thing here. Aaron Short raised his hand. Hello, Aaron.
Hey, how's it going, Manny?
I'm good. Thanks for asking the question.
Yeah. We have a campaign on Angel as well as F6S as well.
On Angels List? Or where?
Yeah, on Angel List as well as F6S. Yeah. So we're called Beeline. B hyphen
The what?
B hyphen line. We're a mobility analytics company.
This one here?
Yeah.
How's it going?
It's going. It's going.
I'm asking
we
how's
do
it going in
kind of
terms of
pitches.
fundraising? You're just
I'm
getting
realizing there's some copy I need to.
Excuse me?
We've been mainly focusing on F6S.
Okay. Well, one of the things I see to improve your campaign is only one founder.
Yeah. Do you think that advisors help or do they hinder a campaign?
You know, the question is who are the advisors, but they help, yes.
Okay.
But, you know, also the biggest thing is get a co-founder that also would help because at least some pros look for that, but doesn't mean that everyone understands that basics. And I'm going to show you some campaigns that are, I'm surprised that they raised $1 million because it goes against everything we learn as an investor. But I'm going to point it out for encouragement because I'm here to encourage entrepreneurs. Like, there's a lot of easy money out there. Have the beliefs, take action on it. So are you out of Toronto? Where are you out of? I see multiple locations here.
Yeah, so we originally started in Toronto, and that's where my original co-founder was from. But then he was also doing his PhD at the same time, and he got burnt out, and so he left. Meanwhile, we just ended up getting contracts, and so we did an accelerator in North Carolina, and then we're also we have our office based in Eastern Canada and Nova Scotia as well. So we were slowly opening an office in Toronto, but yeah, we're just waiting on our client contracts to be closer to our clients there.
Is
So,
this a campaign for fundraising?
this is not a campaign for fundraising. This is a campaign for just our page. So I guess I muddled that up.
Okay, gotcha. All right, well, thanks for showing me. I think that
Would you recommend F6S or AngelList?
how much is F6S charge?
It's free.
They're both, use them both since they're free.
Okay.
The key is get the attention to them. If you can't get attention there, then it's just a billboard in the desert, hoping that someone will drive by one day to buy your offering, if you will.
Okay.
All right.
Thanks,
So
man.
feel free to reach out to me. I have some other comments I'll give you privately.
Yep.
Thank you. Thank you. So who's next? All right, so let's go to another campaign here. I'm going to show you this campaign. Someone raised their hand. Someone raised his hand. 1 second. Hello. Can you hear me okay? You've been unmuted. No, I'm sorry. Maybe not push unmute.
Can you hear me now?
Oh, I can hear you. Yes, it was a user error myself.
Okay, great. So I'm also on AngelList. However, I'm not raising money. But I guess I joined this call just to get a segue into because we're planning on raising money this year. And I saw that you just checked out Beeline. I can give you my
Sure.
my company if you want to check that out and give me some tips. I am a solo founder. I am bringing on a couple more team members in the next month or so.
Okay. So what's the name of your company?
It's called Airlift.
What does it do?
They are we are a fulfillment company, fulfillment and shipping platform
Uh-huh.
for e-commerce sellers.
Nice. Atlanta, Georgia. All right. So you've been doing this for 4 years?
Yes.
How's sales?
We made a mistake initially. So right now we're around, 2019 was 84K. But our biggest mistake was we tried to build a fulfillment center instead of being just a platform. So right now we're kind of pivoting into being more of a platform where we allow other 3PLs to connect to us.
Okay. Yeah, so the thing I see is a single solo founder and the time. Some people look for early companies that are fairly new, not companies that have been around for a while, because the
Okay.
excitement's not there. So they're really betting that things could grow.
Okay.
So, you know,
So
I can't.
would you recommend to pivot to our new model and just say this is a brand new company?
I have to find out more information. Feel free to email me at manny@dreamfunded.com. We could discuss
Okay.
that further. I have to ask you more questions, but to be respectful of other people's time, I'll say we should chat
Gotcha.
about it. Good job on being a founder that has a CS background.
Thank you.
You're welcome. Any other questions?
No, that's it.
Awesome. Thank you. So I'm going to show you for the many solo founders here that think it's not possible. I'll let you know this will make the impossible possible for you. This is a company called Sounders. It was one of the first crowdfunding raises. It had a solo founder, one guy. Here he is, one guy that had no CS degree, no engineering degree, no real work bio, except for he had a popular campaign where he had electric bikes. And again, no founders, just him. But he did raise $1 million in 60 days to create a $10,000 electric car, guys. Now he's back. He's back for more. He's currently raised $500,000 in addition to the $1 million that he already raised. The valuation is absolutely ridiculous. The share price is ridiculous, more expensive than a public company with mega revenue. The reason I bring this up is that, hey, nothing's stopping you as an entrepreneur from getting started. Now let's look at the image. This is just a car that is, what do you call, well, there's no founder in the video either. So for those that realize team is so important, he's a team of one. This is an image. This is not a real car. This is an artwork. So if you sit there and study some of the campaigns, realize people are going there and making the investment, not talking to the entrepreneur, not meeting with the entrepreneur. Guys like this can go out there and raise money. It makes it a lot easier for you to do it. Now, you may not know how to put this fancy PowerPoint or these type of campaigns together, but I'm sure there's other people that can help you with that in your network. One thing I also want to point out is within Facebook, if you have a bunch of email addresses of investors, utilize a Facebook custom list where you could go in the ad campaign manager and upload it the way they want it to, and they'll show you how to do it there. Then you're only targeting them. Our agency, as well as when our crowdfunding sites, when new members would come in, we would remarket them on Facebook. That's one of the reasons for the mega growth. Again, I'm giving away secrets because I exited the 2 companies, but now I'm trying to give the knowledge to the entrepreneurs that are ambitious on the line today. This is a very effective way. And if you're thinking about like, Manny, I want to raise money, but I don't have the investor database and I have a small amount of capital to do this, reach out to me. I'm going to show you how to reach me at the end. So that's what I want to kind of give you guys an overview of equity crowdfunding. It's still booming. It's still big. It's probably the best time ever to do it because you can't meet with people. Casinos are closed. And what's going on is that people are looking for ways of taking a new gamble. And that new gamble could be your investment opportunity. So look at these kind of numbers that are being brought. And one thing I want to point out to you, again, you do not need a platform to do it on. If you want to know more about that, reach out to me. Okay, here's a question. Actually, I saw something, but it didn't pop up. So now it's close to the end. I just want to make sure that you guys know how to reach me here. 1 second. You know, you have my contact information. Feel free to ask me questions now. If there's something I may have missed, don't be shy. You can always reach me here. This is how you book a meeting. But if there's something that you want to ask me that you're kind of concerned about, something that you heard that's a rumor, you want to know what's the best way to get started, if you want to know why is now the time, now's the best time in the history of America to do it. I just can't explain. I think this should be a major story about how much money's coming in because everyone's stuck at home on the internet, hanging out on Facebook. So now's the time to do it, guys. So anyone else that had a question? Okay. Will you forward a copy of the recorded session for me to watch an early part I missed? And the answer is yes. Send me an email. I'm sure it'll also be provided. Manuel is asking a question. Hey, Manuel.
Hey, Manny, you can hear me?
I can hear you.
Yeah, well, thank you for putting this together. But my question was going to be, I was thinking about using a Kickstarter because I'm doing an ed tech startup. Do you have any opinions on maybe Kickstarter as opposed to, equity-based crowdfunding?
I mean, listen, I invested in this company called Notion that started on Kickstarter, raised $250,000 by pre-selling their products, and later we utilized Dream Funded in our network. They brought in excess of $2 million. Then it went on to raise tens of millions, a little over 10 million from a venture firm. And then recently they were just acquired by Comcast Cable, which is a big cable company. So Kickstarter is a good opportunity. What I would suggest for those that are looking to raise money on like Kickstarter, again, use Facebook, but we have a tremendous amount of investor data. So if you happen to want to run a campaign, you want to learn how to target the right people, you should reach out to me at my email address, because I think that Kickstarter is also a good way of starting.
Okay, that makes a lot of sense. Thank you.
You're welcome.
I'll set it up.
All right, one person asked a question, solo founders avoid infighting. So why do investors seek co-founders? Very great question, Jose Ramos. The answer is a couple of reasons. Number one, it's super hard to create a startup with one founder. Number one. Number two, there's a theory that has been proven over and over and over. All successful companies have at least two founders, co-founders. Number two is it also shows the leadership of the founder. If the leader of the company cannot get someone else to believe in them to work on the startup, then they may not be a good leader. Again, this is just theory. And third is when we invest, we're investing in the person, the team, especially early on. So if some unfortunate event occurs from one of the founders, then the business has a financial loss, meaning that we all lose our money. So that's why they want at least two co-founders for a business. In some cases it's three, but at least two. Remember, many people say, yeah, Manny, I don't know how to find a co-founder. I look for people, I can't find them. Angels List is a free service that also has a way you can run job ads. I know many of my companies that we invested in found their co-founder through using Angels List. I'm gonna open it up directly for you for questions. Jose, does that answer your question? You can speak now. I think you're live. Jose. Okay, allowed to talk. I pushed the wrong button. Jose.
Can you hear me?
Yes, I can hear you.
I guess there's a difference in my mind from co-founders and getting a bunch of people to join you. Like in our company, I'm the sole founder, but I've gotten people to join me. A former chairman of National Semiconductor has joined me as an advisor, and I have a wonderful list of people from around the world who have joined me. So I'm wondering if the term itself is misleading and that I'm understanding it wrong, because I have a lot of associates who work with me and for me, but they're not deemed founders. So how do I get around that verbiage to convey that we have a rich set of participants and that we're not dependent on one person?
Yeah, well, the co-founder term is two people moving a business together forward, like actively working. A lot of people add advisors around them. One of the exciting parts of equity crowdfunding, you take Dawn for a moment, who raised $1 million, and she did it in under, I think, 90 days. She's a solo founder. So, and she had a bunch of advisors around her. Now, that's not a normal thing where angel investors invest in, or people from Silicon Valley, but you're dealing with people that are probably a first-time investor. So they don't know these things to look for. And that's why billions of dollars are going to that segment. That's why some people call it dumb money. I think it's money. So it doesn't matter if there's not great intelligence in terms of investing behind it. So to answer your question, if a person is actually helping you build your business, then he has split in equity, then that's a co-founder. If he's an advisor, he checks in every once in a while, he gives you advice, that's an advisor. I would not mislead the public to say, this guy is fighting exactly with me, shoulder to shoulder, to make this into a huge success. Now, the real question is, these terms are really for tech founders, tech entrepreneurs. Not everyone's a tech entrepreneur. Some people are in small business, and where some small business owners have one founder, one owner. What do you do?
Well, we use artificial intelligence to give seniors and elders a voice. So we are actually in nursing homes funded by states right now to address the isolation that has been brought on by the pandemic. But we do this also, we're going to be doing this worldwide. So we're trying to address the situation of people living too long and having fewer babies that we see looming on the horizon. So we think that our market is huge. People are going to be living 10 to 30 years beyond what normally had they've lived before, and they really don't have a vehicle for, as they age and pick up cognitive impairments, for participating in the virtual world. We give them that.
Appreciate that feedback. Here's a suggestion for a lot of founders that are on the line. Most people are waiting to most entrepreneurs want to get a phone call with an investor so they can sell them. Most people don't realize that. I'll give you an example of a company that we sold for, well, I can't say the numbers, was very big. It's one of my second largest exits besides Dropbox. A company called TaskRabbit. TaskRabbit was a big marketplace that allowed independent people to help other people like fix their IKEA furniture. Funny that it was actually sold to IKEA. But when they were raising funds, we utilized a webinar where it was recorded in advance about where they saw the market today and where they saw it going. And then we later messaged the people that were interested in investing, perhaps, the webinar. And we didn't talk to people, and people made so much commitments. It was really amazing. And I found that to be interesting, because when you had a later stage company utilizing that tactic, I don't think only a later stage company can use it. In fact, we're advising a smaller company that had used that, and they're closing 7 figures based on that. So they are creating this webinar structure in advance of what they're doing, what they're going to do. And then instead of having an investor talk to them, they say, hey, can you take a look at this? Tell me what you're thinking about it. Or they're sending it out to the different people, and then getting people excited, just like you try to get me excited on the phone or where you're going with this. Most people don't realize they're just missing an audience to raise money from. They know exactly what to say. Does that make sense? And all the dynamics of co-founders and valuation, all that stuff goes out the window because you get them emotional. And as human beings, we make our decision emotionally, and we back it up with logic.
I agree with that.
So for those that are still on the call, you send me an email. There's a free mindset training I do. And it really just shows entrepreneurs on how to think, how to stay positive. There's no cost for this. There's a few people gathering daily for it. And it's really more about, especially in the area of equity crowdfunding, it's so new, it's so rare. Most people don't have anyone to get advice from, or that belief is the biggest thing. I've seen a lot of people that are asking questions which had Hispanic last names. Hispanics are not taking advantage of this. Like less than 1%, less than half of 1%. And I guess it's the belief. It's not just for one racial thing. Everyone has a belief issue with using this. Those that believe it, use it, raise the money, and other people are starving, wondering why they can't raise any money. So if you're one of those people that think belief is your biggest issue, feel free to email me here at mannyfernandez@dreamfunded.com. Is that end of your question, Jose? We're about to wrap it up now. Any other questions?
It does, Manny. Thank you for sharing all this information with us.
No, pleasure's all mine. Look forward to your email. All right, so we're gonna handle one more question before I run. So everyone's been answered. All right, anything else? Going once, going twice. So anyone wants to reach me, pitch me directly, you can message me here, send me an email here. And if you're looking for like more of coaching one-on-one, you can't afford $59. This is just for a donation, if you will. Just let me know. We do a sponsorship. We just want to empower more entrepreneurs on how to utilize this great time in America where you can use the internet to pull in money and employ people, because we got to put those 17+ million people to work. And only entrepreneurs have that confidence to build things. And we need you more than ever before. Don't you agree? So thank you, guys.
Thank you, Manny. And for everyone who's asking about a recording, you'll get a note about that soon. And then Manny, I've also added you to our Slack channel just in case there's some people who want to reach out. And I sent everyone a link, and we'll send everyone a link about how you can get involved in the channel. Thank you.
My pleasure. Thank you for having me. All right, bye-bye.
Bye.